There are a lot of people who really love Costco. Consumers love Costco because of their great prices, and investors love Costco because the stock is one of, if not the best performing defensive stock of the past 30 years. But many investors do not love the valuation of Costco. Trading at a 54 forward PE and a 1.5% free cash flow yield, it's hard to justify an investment into this company at these prices. But I would not be shocked if it continues to march on just like it always has, returning 10 to 15% per year, year after year after year. But what if I told you that there is another company, a company that you're probably very familiar with, that has better profitability and a similar growth profile as Costco? But you can get this company at around half the price. That company is Home Depot, ticker HD, or as I refer to it, the poor man's Costco. They have hit a bit of a rough patch the past couple of years as the housing market and its corresponding home building, renovation, and other improvement spending has stalled as a result of higher interest rates and inflation. But over the long run, they're growing revenues at around 7%, pretty much the same as Costco. In fact, Morningstar uses 4% revenue growth for Home Depot in their valuation model, which typically spans a 10-year period, versus the same 4% that they use for Costco, which in all fairness I think is quite low for what they've been able to achieve over the past 10 years. When it comes to profitability, Home Depot takes the cake. Not only are their free cash flows growing quicker than Costco's, Home Depot's 12% free cash flow margin is over 4 times higher than Costco's 2.5% free cash flow margin. Home Depot's baseline return on capital is around 30% versus 20% for Costco, and their net margin is higher at 10% than Costco's 3%. And that's not it. You get 2% dividend yield and a 2% stock buyback yield for a total shareholder distribution yield of 4% with Home Depot compared to 2% from Costco. Having said that, there is a caveat regarding Home Depot's share repurchases that we will discuss at the end of the video. With Home Depot, you get the similar growth profile, better profitability, and higher shareholder returns for half the price of Costco. Trading at a 28 forward PE and 3 times sales, Home Depot is by no means cheap, but their 4% free cash flow yield is nice, and it's plain to see that Home Depot is a better value than Costco is. That is not to say that Home Depot is a better company than Costco is. I'd much rather own Costco if I could only invest in one. Costco has momentum in their industry right now, and I think it's just an all-around more well-run company and better positioned to outperform the S&P 500 in bear markets as well as bull markets over the medium term, just like it has over the past 30 years. I also really dislike the amount of debt that Home Depot has accumulated versus the $5 billion cash surplus that Costco is holding. Home Depot is $47 billion in the hole, and most of the debt has been used to buy back shares and fund the acquisition of other companies. In fact, they just completed the buyout of a couple competitors and used $18 billion in debt to do so. Morningstar thinks these acquisitions were prudent investments that will help them push margins up and will help build and defend its moat. Problem is that after the most recent acquisition, they decided to temporarily suspend the repurchase of their stock until, quote, "we have used our cash to reduce our outstanding debt," end quote. Although I support their efforts to reduce their debt, every potential investor must be aware of this temporary suspension of their stock buybacks. That 4% shareholder distribution yield is going to be around 2% for the foreseeable future. Even with the suspension of buybacks, I just can't make myself pull the trigger on Costco at 54 times forward earnings and a 1.5% free cash flow yield. They're trading higher than the likes of Arista Networks, Amazon, and even Nvidia on an earnings and free cash flow basis, even though these tech companies are growing their top and bottom lines significantly faster than Costco is. If that's too rich for you, like it is for me, then Home Depot may be a better alternative. Well, that'll do it. I'd love to hear your thoughts on these companies in the comments. Do you agree or disagree? Are there any other poor man's Costcos out there that you think are good investments? If so, please leave them in the comments. I'm honestly interested in finding a similar company with similar growth dynamics and competitive advantages that I don't have to pay so much for. Also, please make sure you like this video and subscribe to my channel so you don't miss any videos when I release them. It's a quick and free way you can help me grow this channel if you find this content valuable. Lastly, if you're interested in other high quality companies that could be good buys right now, click on one of the thumbnails that you see on your screen. Until next time, you all take care. I'll see you in the next one.